welcome to Pride Partners International's monthly webinar. Thank you for joining us today. Pride Partners International is a global partnership of firms and specialists in transfer pricing and financial valuation. The association is the meeting ground for professionals capable of facing a challenging business environment, helping them connect to boost their continuous professional development and enhance their technical and human skills and abilities. This partnership is made up of experts recognized by their trajectory and prestige in the transfer pricing and financial valuation fields. Experts that constantly participate in the exchange of technical information, knowledge development, and implementation of global best practices. When a firm joins the PPI partnership, it increases its scope immediately and exponentially. Business becomes much simpler by accessing training, technology, resource optimization, and new business opportunities, among other benefits. We invite you to learn more about Pride Partners International. Contact our agents and be part of the global elite of transfer pricing and financial valuation consulting. Our transmission will begin shortly. We invite you to participate actively by sending all your questions or comments through the live chat. Again, thank you for watching, and we hope you enjoy the event.
Hello everyone, welcome to our webinar, and today our topic is transfer pricing benchmarking study preparation. During our webinar, we will take a look at the process of how benchmarking studies are performed. We will also discuss certain theoretical and practical aspects concerning the process. First of all, maybe a short introduction about RoylatyRange. So RoylatyRange is a transfer pricing database provider. We have several databases such as company financials, royalty rates, service fees, loan interest rates. We also have tools for DEMPI analysis, credit rating estimation, as well as benchmarking automation. At the moment, we work with more than 1,000 clients located in more than 70 countries, including tax administrations, consulting firms, Big Four, Tier 2 consulting firms, as well as multinational enterprises. And moving on to our topic today. So benchmarking study is basically a detailed comparison of publicly available information concerning financial indicators of companies, prices, or royalties in order to determine arm's length range remuneration. When it comes to the benchmarking process itself, there are a couple of things we need to take into account. So first of all, the determination of available sources of information. So the case could be that internal comparables are available, yet there may be situations where we will need to look into external comparables, and for that purpose, we would most likely need to use commercial databases, such as RoylatyRange as an example. And afterwards, we will need to decide which transfer pricing methods to use. So the case could be that for royalties, we will use comparable and controlled price method analysis, CUP method, or when it comes to services such as management or distribution, we may need to apply transactional net margin method. Once we have the answer to these couple of questions, we will proceed with the identification of potential comparables. So essentially, that means that we will need to, for example, use commercial database and find potentially relevant comparables. At this stage, it is extremely important to have a wide range of search parameters and filters that would allow us to find relevant data set. Once we have the data, we basically start selecting and rejecting potential comparables. What we see in practice, what our clients do mostly is that deductive approach is applied, where we start with a, let's say, wide set of companies or transactions from the similar industry, and we narrow that data set down by using certain selection parameters. And once we have the final set of accepted comparables, we basically interpret the data and determine the arm's length range remuneration. So now it would probably be a good time to take a look at practical example. For that purpose, let me switch to the database. And we will start with the royalty rate benchmarking study. So as you can see, at the very first stage, we need to select certain filters in order to find potentially relevant comparables. So in our royalty database, we have a number of different filters that you can apply, starting with keywords, industry codes. You also have type of intellectual property, from patent to trademark, brand name, and various other. Date of the agreement, exclusivity provisions, company names, excluding related party agreements, searching by industry, as well as the purpose where intangible is to be used, the rights granted, whether it's manufacturing, marketing, development, general usage, geographical coverage, royalty base, and royalty rate itself. And to make a quick example of the search, we can even use a predefined search strategies. We call them search result sets. So let's say we click on agricultural industry, and the database will provide us with a list of potential keywords that we can apply. Of course, this is modifiable. We can add also some negative keywords in case needed. Afterwards, let's say that we need to benchmark for a trademark royalty rate. So let's say brand name, let's say trademark, trade name. For safety, we can add other marketing intangibles as well. And we adjust the search. Afterwards, we end up with a preliminary set of potential comparables. So in this case, more than 150, and we have quite a lot of information here, such as royalty rate, date of the agreement, description of the license, short 1 or 2 sentence summary describing the essence of the transaction. Now, if we want to understand one transaction a bit better, we just open up a preview, and it will show us the companies involved, licensor and licensee, where business activities, description of object, geographical coverage, date, exclusivity provisions as well. Also, some specific features, additional comparability factors that we basically took from OECD BEPS guidance, such as extent and duration of legal protection. So how many patents or trademarks we have, who's responsible for maintaining intellectual property, rights enhancements, revisions, and updates as well. Also, functional analysis, where we have a standardized list of functions, risks, costs, and assets, and where we basically show you whether it is licensor or is it licensee responsible for certain function, taking certain risk, bearing cost, or investing asset. The system we use is very simple, so we use checkboxes and we distribute them to the left side or to the right side. Left side represents licensor, right side represents licensee. So in this case, quality control, the distribution is equal, meaning that both licensor and licensee, we are actually involved to the same extent. When it comes to product liability, this risk is taken basically by licensee only. And afterwards, we can see the royalty rate and royalty base, additional payments, if any, and description of the royalty payment, like this. Also, in case needed, if you want to double check anything, you can always take a look at the text of the actual agreement. Like this, you will see all the pages with all the information. And we have this additional section with more data on intellectual property, so patent and or trademark numbers, synopsis of patent and or trademark, and image gallery, which helps you to make a decision whether this is relevant transaction or not. After this step, in order to prepare the benchmarking study, we can either download the data in Excel file and do everything manually, or even we can use an additional feature called Send to Benchmarking tool, where we will be able to prepare acceptance and rejection matrix within the database. So this is basically the part where we will select relevant comparables, reject irrelevant ones. And we start with so-called general comparability analysis. So on the left side, you see acceptance and rejection matrix. while on the right side, you see agreement data. So royalty rates that are visible to each agreement, company names as well. And the good thing about our benchmarking add-on is that you get certain suggestions on whether to reject agreement and for which reason. All of these suggestions will come based on our experience. So rejection reasons that we use include related party agreements, agreements with research institutions or individuals, agreements with royalty base, which is not sales, are rejected, as well as different type of transactions. For example, sale of IP agreements. And quick example, agreement number 151. This is automatically rejected by our system since there is even a notification saying that this is a related party agreement. And of course, you can fully customize and modify the acceptance and rejection matrix. You can accept rejected agreements, so you can change checkboxes, you can introduce additional columns in case you like, and you can also make comments and notes about each agreement. Afterwards, the accepted comparables move on to the second screening stage. We call it remuneration analysis. Here we basically look into the compensation mechanism to make sure that royalty rate is not distorted. Distortion could happen because, for example, agreement involves equity compensation in addition to royalty rate. Or the case could be that the royalty is complex, conditional, maybe it's split type of arrangement or cross-licensing. Another quick example, for instance, agreement number 96. This is automatically rejected because this agreement involves significant equity compensation. So if you double check the payment terms, you will basically notice that indeed, in addition to this 2% royalty, 4 million shares of common stock are payable. So we would basically suggest to reject this agreement. Afterwards, we proceed with the third stage of the analysis, and here we look into the royalty rates. So at this stage, we basically have the final set of accepted comparables. We just need to make sure that we are happy with the way royalties are calculated. So in certain situations like here, agreement mentions 5% royalty, while the calculation input, our suggested value, which we used in our benchmarking study, it also says 5%. In some situations, you may have a multiple royalties, and our suggested value in this case would be an average. In our benchmarking study, we actually looked into this agreement, and so we noticed that, for instance, royalties vary based on volume of sales, and we would suggest to use an average in such a case. Of course, here you can fully customize everything. For instance, you can say we want to use only 1% royalty, maybe 3% as well, or all royalty rates separately, 1, 3, and 8. So as you can see, our tool, it has certain suggestions so that you don't have to start from scratch. So all of those suggestions, whether it's acceptance and rejection matrix or suggestion of which royalty rate to use, it is based on our actual benchmarking study, and we performed hundreds of them over the time. And after this, we can take a look at the preview of the final conclusion. In this situation, the interquartile arm's length range of royalty rates would be from 2 to 5%, with a median of 3%. And now the final step, we click next, and we basically once again see the conclusion, and we can download so-called benchmarking study write-up. So this is going to be an Excel file, which basically documents the full process from the way we started the search, so quantitative filters, as well as our qualitative screening, where we rejected agreements because of certain reason. So this is how it looks like. We have the strategy, we have general comparability analysis, remuneration analysis documented. Also, all those comments we made, like note number 1, we are documented. Selection of royalty rates here and calculation part. So this documentation, it basically documents everything from the very beginning to the very end. And as you can see, this is quite transparent process because each step is documented in detail. Afterwards, we can basically add this benchmarking study write-up as a part of our TP documentation, as a part of benchmarking study write-up, description of the process. So this is how it basically goes. Afterwards, I would probably say we can take a look at another example at the benchmarking study concerning transactional net margin method. And for this purpose, we will use our companies database. Right here, whenever we start using the system, we get more than 65 different filters for transfer pricing search, starting with company-related filters such as general characteristics of the company, activity, industry codes. We have filters for ownership and relations to effectively reject related companies. We have financial information availability filters and various financial ratios that we may apply. So for the sake of the demonstration, let's imagine a case that we need to benchmark companies that sell food. So for example, food stores. So we can just type in these words into activity keyword section. We can add additional industry codes as well, NACE or SIC in case needed. Also, from the practical perspective, it would be important to focus on active companies. So to avoid companies that are bankrupt or pre-registered. Also, it would be quite nice to look at those companies where website information is available. So we have this filter here as well. And for instance, if we want to focus on companies incorporated since a specific date, you can choose this filter, year of date of incorporation. So let's say companies from 2010 or 2000, so depending on the case. Afterwards, it would make sense to exclude related parties. So we have these two options, no shareholder as well as no shareholding. So yeah, no shareholder with 25% or more shares, as well as no shareholding of 25% of shares or more. The good thing as well is that you can adjust the threshold. You can basically choose 20, 10, 30% or any other percentage according to your local TP regulations. In addition to this, probably the main thing that we are looking for from the database is financial information. So it really depends on profit level indicator that we need to benchmark. So if it's, for instance, EBIT margin, operating profitability, we will need at least to have information on turnover, so we can select that from our filters, and we will need information on operating profit or loss, EBIT. Later on, we can add the condition about the years for which we need the data. So let's say from 2019 to 2021, and also that financial should be available for at least 2 years, at least 3 years, at least 1 year, all the years selected. Apart from that, if you want to be a little bit more specific, you can even add the condition regarding turnover, costs of goods sold, as well as balance sheet items about how big we should be. So for instance, let's say that operating profit or loss, well, it should be higher than 0. So company should be profitable. And we just make the condition consistent from 2019 to 2021 for all 3 years selected. So we can choose either this option or this option in this case. Also, in case you want to make a little bit more advanced search, you can add a number of financial ratios describing the company, such as intangibles to total assets, debtors to turnover, profitability ratios, such as gross margin, TP-specific ratios, Berry ratio, net cost plus, and a number of liquidity ratios. Once we are happy with the strategy, we just run a search to see what kind of companies show up. So in our case, we get well more than 100 companies, and we see a quick snapshot of these companies describing key characteristics: website, latest available financials, country of the company as well, and company name. We can adjust this table to display only those columns that are relevant to us. So maybe we want to see email, maybe we want to see company VAT number, industry codes, or anything else. Now, if you click on a company name, you will be able to display the full summary about this company. And this is, of course, needed in order to make an informed decision whether this company is similar to what we are looking for or not. So first of all, we have general business characteristics, address, website. You can always open up the website to double check if company's business seem relevant enough. So in this case, even from the images, we can see that most likely this company will be relevant. Some food products are being sold. And we have company industry codes, NACE and SIC, primary and secondary were available. We have company keywords, description of the company. We can also see ownership data, so owners of the company, managers as well, financials. In this case, a standardized profit and loss account, balance sheet. Yet in this situation, we are denominated in local currency, Danish krones, since the company is based in Denmark. So for this purpose, you can very easily make a conversion to euro, to British pounds, United States dollars, and that will do the trick. Afterwards, we have ratios that are calculated automatically based on available financial data. We have branches, if any, and documents, so some registry documents which you can basically download. Two additional features that could be quite useful: discover ownership, which shows you the legal structure of the company, so shareholding basically. You can see historical, current data as well. You can download this in case needed as an image or data. And also explore connections. This is a slightly different chart. It shows you other type of corporate linkages. So in the middle, we have the tested company. And I can actually see that the beneficial owner of this company is actually connected to another entity. Because this Randy Moller person is a liable partner in that another company. And in fact, we take into account a lot of different linkages, such as persons, managers, auditors, liable partners, as well as contact details of companies, phones, emails, websites, addresses. So if two companies have the same phone number, this would be displayed in this chart. And in terms of usage of the database, so how can we use this information to prepare an actual benchmarking study? So as was the case with the royalty benchmarking study, you can, first of all, download the required data into Excel file. You would just need to choose the appropriate years and required financial data and other comparability factors. So in that case, you would need to do the manual process of reviewing comparables, accepting, rejecting companies in Excel file. Yet here as well, we have this add-on to prepare the benchmarking study. So if we say start benchmarking and we include some specific name for the benchmarking study. So let's say this is the name of the benchmarking study. And afterwards, the system will direct us to the acceptance and rejection matrix. So on the left side of the screen, we basically have each company that the search returned. and we have access to all this information about each and single entity. So company data, ownership data, financials, and rest of the information. Also these linkage charts, discover ownership, explore connection. So this is probably more than enough to make the decision whether to accept the company or to reject it. So let's say first one we want to accept, we can add the comment, it's optional. Now, if you decide to reject the company for some specific reason, you would need to indicate the comment. So you can type in any type of comment, and yeah, you can move on to to another company. Also, in case you are rejecting the company, you can use any of the suggested reasons. What we see is that they are quite commonly applied, so doubt regarding independence, insufficient data, significant difference in functions or products. And also one quick note, if you reject the company, you will be able actually to see the comment you added. So you can reuse your comments without having to type it in again and again. And for the sake of demonstration, let me accept a couple of more companies. When accepting the company, of course, the comment can be added, but as mentioned, it's optional. So let's accept at least 4 entities. And yeah, afterwards, we can take a look at the acceptance and rejection summary matrix. And this will basically show us the status of the company, whether it's accepted, rejected. We will also see the comments in case we included them. And yeah, afterwards, we just take a look at the results. So here we have a couple of variables. So we have PLI, profit level indicator. We have calculation, whether it's weighted average or pooled calculation, year range. So from PLI list, you can choose any type of PLI. And in my example, I chose to look into EBIT margin. And year range, if I'm not mistaken, it was from 2019 to 2021. And yeah, accordingly, using weighted average for each company, we see the conclusion at this stage. So median, quartiles, full range as well. And yeah, as a final step, we can download the benchmarking study write-up. And yeah, this is also going to be an Excel file, which basically documents the full process from the filters we applied, so quantitative filters, to the actual screening process. So yeah, let's take a look. So this is the filters. These are the filters we applied. We have search results. So each company with all the possible information from the database. So financials, descriptions, and rest of the information. This is acceptance and rejection matrix. So we have accepted, rejected companies, comments, if any, accepted company list with websites. And this is the calculation part. So this basically shows you individual EBIT margins of companies, weighted average, and calculation statistics, quartiles, median, full range, and a chart, which shows interquartile and median statistics. The rest of the information is basically more detailed descriptions about accepted companies. So yeah, all in all, as you can see, the benchmarking process, whether it's for royalties using comparable and controlled price method, or TNMM for specific services as an example, the process is not that difficult. But of course, it is important to have good tools in place, high quality data, and to have a transparent and consistent approach. So yeah, from my side, I would say that this is pretty much it. So thank you very much for your time. And yeah, I will be more than happy to answer any questions that you may have. Thank you.